Okay, so in this episode, we are going to talk about trading with Elliott Wave. Now, this is something that Solo said and it always stuck with me. Trade what you see, not what you think. Now, we will begin to dive into this a little bit more right now. So, trading the impulsive wave. The holy grail of trading is consistency, adaptability, and diversification of strategies. I will always stand by this. Now, after a corrective wave, trade the next impulsive leg. Mark these impulsive legs on the higher time frame and enter on the lower time frame. Again, these are all just examples of how you can trade Elliott Wave. There's so many ways. So let me just zoom in here for you real quick. Now, as you can see, on the higher time frame for NOS 100, on the 4 hour, I marked up my impulsive legs. My impulsive and corrective. 1, 2, 3, 4. I see that price retraced near my 0.38 and my 0.5 level. Waited for some candlestick price action to tell me that it's finally done and it's actually done correcting. And again, this is not a sure thing. This is just me using price action to tell me I think we're done. I dropped down to the 15 minute. As you can see, I'll mark up my fair value gaps, my bearish and my bullish, just in case price retraces into the fair value gap here before my bullish fair value gap and inverts this. Let price play out. What does price do? Taps into my bearish fair value gap, rejects off of it, taps back into this bullish one. I finally enter once I see this engulfing candle and I see that price swept liquidity here. It swept it, first of all, by everyone that put their limit order on the fair value gap and they put their stop loss just under it. And this wick here, whoever placed their stop loss under this wick also got swept up. Finally enter, target the highs, and as you can see, take profit was eventually hit. Now, what high did I target? I'll show you right here. I targeted the number 3 here, the third impulsive wave up. That was my first target. Now, that is just one way of doing things. Let's hop on to the next one. Now, another one is after the impulsive leg is completed, trade the beginning of the corrective wave. Trading your ABCs are better from the 4 hour time frame and up. So we're going to use the 12 hour instead. So if you're going to start trading corrective waves, although I don't recommend you to do that, you can try it here. So as you can see, wave 3 ended here, but I confirmed it by first letting the A and B leg get marked up first. Now all that's left to target is the C leg. Now typically it's supposed to retrace to the 0.3 level, typically. So what we do is we drop down to the lower time frame. Here I marked up a 15-minute order block, but I used my 1 minute time frame to enter, to look for something that says, hey, it's time to enter, let's go, right? I want to get a really tight entry. So you could actually drop down to the 15-minute first, put your order block, and then drop down to your 1 minute for your entry. Next, as you can see, price actually tapped me in on this area right here first. Set my stop loss to the top of that order block, targeted just the fib level only, right here. And as you can see, I caught all of this. Now, obviously I didn't actually take this trade. This is just an example. Another little pro tip here is I would avoid trading corrective waves if possible, since the market can change direction at any moment. Basically what I just told you earlier. So if you're a beginner, stick to trading impulsive waves instead. And this also applies to advanced traders. Stick to trading impulsive legs. Please stick to that. Plus you get way better risk to rewards than this. If you think this is good, imagine catching an impulsive wave. So on to the next. All right, so when counter trend trading, don't target the furthest area of interest on your fib, but go to the closest. In other words, some of you guys be targeting all the way to the bottom of the fib darn near, and you wonder why you get stopped out. Here, I am essentially counter trend trading from wave 3. I mark up my higher time frame waves, obviously 1, 2, 3, 4, and 5, whatever. Obviously, I start off from wave 3. Let's just pretend that wave 4 and then all the way up to wave 5 didn't exist. So mark up my wave 3. Let's say on the higher time frame, I see some candlestick rejections, or I'm very eager. Let's just say I drop down to the lower time frame and then I see this candlestick rejections, right? Some inversions right here. This little gap right here. Let me zoom in for you. This little gap right here, right? Price inverted it. So as you can see, I also marked up my 15-minute fair value gap. Price comes down, rejects off of it a little bit, comes back up, retraces into some fair value gaps up here. And as you can see, there was also a break of structure here. Price comes down, finally inverts that 15-minute fair value gap. What do? I target again my fib retracement level. And as you can see, it even targeted or tapped into my 4-hour fair value gap. And if I wanted to, could have targeted the 4-hour demand zone, but I'm not going to get greedy here because, well, you never know, anything can happen. And price actually only tapped into the 4-hour fair value gap before moving up, believe it or not. So I could have just targeted the fib level or the 4-hour fair value gap. In this case, I wanted to be safe and just targeted the fib level. Okay, so yeah, you could have marked up your higher time frame waves all the way to wave 3, mark up your 4-hour fair value gaps or your 4-hour demand. I would say mark them all up, get ready, look for price action, look for some confirmation, enter, bam, you're good to go. As you can see, I set my entry was at the 15-minute and my stop loss was just above this little high right here. All right, moving on. Now we're gonna use the DRIDR. Yes sir. With Elliott Wave, you'll have a better idea of what breakout could be false or not. So let's say you're on an uptrend, right? You're in a higher time frame uptrend. You mark up your ABCs or your 1, 2, 3, 4, 5. In this case, we are in a corrective pattern. So we have A back here and then B, and obviously we're gonna shoot up to C. So what do we have here? We can tell that wave B has finally finished forming by these candlestick patterns or the consolidation. And what do we have here? A false breakout of the DR. So if you took this trade, you would have gotten stopped out. But if you used Elliott Wave, you would have waited for a breakout to the upside. And in this case, we had a nice breakout to the upside from the DR. Took the trade here, entered at this one right here. Let me zoom in for you guys. Entered right at this candle right here that broke that DR high. And then you could have set your risk to reward to, let's just say, a fixed one like a 2.0, or you could have targeted another wave on the higher time frame. It's up to you. Pretty easy, pretty simple. Open up the charts, try marking up your Elliott waves, see what you can do, right? Over time, you'll start catching an eye on these things, okay? All right, now let me move on to the last few sections of this video. All right, so here are just some examples of how you guys can mark up your Elliott Wave corrective patterns or impulsive legs. These are just ways that you can trade with it as well. So let's just say you're on Ethereum on the 12-hour time frame, and you notice price shoots down fairly aggressively and it starts moving to the sides, right? You can automatically assume that this is some kind of impulsive move. So you don't even have to go all the way back and mark up everything 1, 2, 3, 4, 5. Okay, yeah, this is an actual impulsive move. Most of the times it is. So from here, you can just start marking up your waves A, B, and C. And then from there, you can either go on a higher time frame or from that same time frame, you can trade it. And as you can see, it did go down. Here, I have another example. Your Euro USD on the 8-hour. Let me zoom in for you. So as you can see, marked up my leg. 1, 2, ended here though. And the only reason why I marked this as my second wave or my corrective wave was because I started seeing this price action, and it was at the 0.618 level. And as you can see, this price was consolidating here, indicating that there's some kind of order block or the fair value gap here, right? This one right here was not letting price break through. A lot of confluences. And as you can see, we have price finishing out, right? Wave 2. And what did price do? Started going down. Pretty cool, right? Another example. Price goes up. We have that strong impulse. A, B, C, D, and E. And what does price do? Finally breaks out, goes all the way back up. Pretty sweet. One more right here. Strong impulse. USD CAD 4-hour. A, B, C. Bam. Goes back up. That easy, that simple. If I can, I'll add more stuff to the presentation so that way you guys can download it and take a look at it yourself. Alright, so lastly, for the indicators section, you guys can use either indicator that you want. You don't have to use them, but I think these can help you out. I'm gonna be honest, I haven't really used them like that, but I've seen some pretty good videos on them, so if you want, check them out. I think you might benefit from them. I know that if I give myself some time with these, I'm pretty sure I could end up using them for good. Lastly, thank you so much for watching this series. I will keep adding more stuff to this series later on down the line, but it won't be anytime soon. This is just the main stuff that I wanted to share, and I think that if you're struggling a little bit with it, it's probably best that you join the Discord and ask me questions there. I will do my best to answer as quick as I can, but yeah, share with me your charts, your ideas, your trading styles with Elliott Wave. Let's combine some stuff. Let's make something together, you know. And before I go, let me just leave you with a little something from Psalms 107 verses 28 through 29. Then they cried out to the Lord in their trouble, and he brought them out of their distress. He stilled the storm to a whisper. The waves, see what I did there, of the sea were hushed. Ladies and gentlemen, if there is something going on in your life right now, whoever you are, you're going through some trouble, whether it's trying to figure out how to trade, family trouble, whatever the case may be, please don't hesitate to reach out to me or someone that you know, a friend. Don't go through these storms alone. Always reach out to someone, especially if it's someone that you know is a knowledgeable, smart person, and especially if they have their trust in God. So whoever you are, whoever this was, whoever this is, God loves you. He has a plan for you, just how he has a plan for me. And I can tell you this right now, if it wasn't for my trust and love for God, I would not be giving you guys this content for free. I would literally be selling you guys everything that I know. So you have God to thank for that. Other than that, guys, I pray that you guys have a blessed trading session. And even if you feel that the market is against you, I promise you, God is not. I'll see you all in the next one. Peace.